Hi everyone, thanks for tuning into my channel, All Things Accounting. Today what we will be examining is the variable costing methodology for valuing inventory. So stay right there and we'll go through this together. So valuing inventory, there's namely two ways that companies do that. That's through absorption costing, or also known as full costing method, or in this case what we'll be examining is the variable costing methodology. So that helps companies to value their inventory and in turn value their cost of goods sold. So let's examine what variable costing is a bit more in detail. It's a costing method that includes only variable manufacturing costs. So that only includes direct materials, direct labor, and variable costs in the cost of a unit product. Again, just like absorption costing, it's also known as full costing. The variable costing methodology is also known as direct costing method. So direct costing. So we will run through a numerical example and we will contrast between the variable cost and the absorption costing method. If you didn't see my absorption costing tutorial yet, please go and do so, and that will provide a little more insight for the comparison that we'll be doing on a numerical basis. So under variable costing methodology, we're going to be using the same setup of the numerical example that we used under absorption costing. Just to review here, we're going to assume that ABC company has 6,000 units produced every single year. The variable cost per unit is going to be the direct materials of $2, direct labor of $4, variable manufacturing overhead of $1, variable selling, general, and administrative of $3. The fixed cost per year here, fixed manufacturing overhead is $30,000 and the fixed selling, general, and administrative is $10,000. So under variable costing methodology, we are going to be only concerned with those particular costs that are associated directly with manufacturing, as opposed to under the absorption or the full costing method, where we will account for fixed costs as well. So here we will account for direct materials, and that's $2. Then there's direct labor, that's $4. The variable manufacturing overhead is going to be $1. So under the variable costing method, this is going to be unit product cost is total $7 only, as opposed to under the absorption where it would be $12. Notice that here in the under the absorption costing method, the fixed manufacturing overhead, we took the $30,000 divided by the $6,000 to calculate on a per unit basis what that fixed overhead would be allocated for each 1 unit of product that is produced. Here, under the variable costing method, or yes, direct costing method as well, it's also known as the direct costing, how we will treat this 30,000 is that we will take that and it will be charged off in total, in aggregate, the 30,000 against income as a period expense, along with the selling, general, and administrative costs. So under variable costing, only variable manufacturing costs are accounted for. So I hope this tutorial helps. If you enjoyed it, please subscribe to my channel. Please click that bell notification icon so that you're always up to date on the new and exciting tutorials that I'll be posting, and hit that like button. So until next time, take care.